For, what, more than a year now, the big question in the market has been, what is Warren Buffett going to do with all that cash?
A mountain of cash.
A $344 billion mountain just sitting there waiting.
And I have to tell you, my investor colleagues, the wait is now officially over. After all that time, Berkshire has finally splashed the cash.
And the move it's stunning.
It really is. It's a $4.3 billion surprise bet. And it's not on railroads, not on insurance, but right in the heart of the AI frenzy. The one place he has, long avoided. Welcome to DeepResearchGlobal.com podcast. As an industry analyst here, my focus is pretty clear. I want to synthesize the crucial details from these recent regulatory filings and materials surrounding Berkshire Hathaway. We're going to break down this huge capital allocation decision, this new stake in Google's parent, Alphabet, and what it signals for our investors.
Especially regarding BRK's strategy now, and I think more importantly, what comes after Buffett.
Exactly, the post-Buffett era.
Okay, let's get right into this, because the shock factor is, it's real. The filing dropped last Friday, November 14th.
That's right, the 13F. It details their holdings as of September 30th. It's really our only peek behind the curtain.
And inside, this new $4.3 billion position in Alphabet.
What's so fascinating here, for me, is the contrast. I mean, this move runs completely contrary to Buffett's famous value investing style.
And his aversion to pure tech.
A total aversion. He built a $154 billion fortune-backing, dependable, frankly unglamorous companies. Think GEICO, Occidental Petroleum, BNSF Railway.
Right. Alphabet is not that.
Not at all. And now, just like that, it's Berkshire's 10th most valuable holding.
So the obvious question is, what's the driver? I mean, if I look at the market, it's got to be AI, right? The sheer technological momentum.
Oh, absolutely. Alphabet has surged, 46% this year?
46%. And that's all fueled by this massive demand for artificial intelligence, plus the momentum in their cloud business, search, and of course, YouTube.
Which brings up the biggest question for me. Why now?
Exactly. Why now?
Why jump in when the valuation is already so high? I think, you have to go back in time a little. Buffett has admitted, in his own words, that he blew it by not investing in Google early on.
I remember that. He had direct insight, didn't he?
The ultimate insight. GEICO, which Berkshire owns, was paying $10 a click for their search ads back in the day. He saw the business model working firsthand. He saw the margins.
But he felt he didn't understand the technology.
That's what he lamented. It was a failure of imagination about the tech, he said, not a failure to understand the business itself.
So that fear seems to be gone now, or at least it's been overcome. This is a huge commitment, $4.3 billion. That feels big.
It's massive.
The consensus seems to be this was his investment lieutenants, Todd Combs or Ted Weschler.
Yeah.
But I have to ask, with a position this large, the 10th largest in the whole portfolio, does that suggest Buffett himself gave his final blessing, a public nod to this new direction?
That is the multi-billion-dollar question, isn't it? And my take is this. Yes, Combs and Weschler handle these kinds of tech and high-growth bets, but the size, the timing, it all feels like a signal from the top.
A strategic signal.
A very strategic signal.
Yeah.
It confirms that the future leadership, Greg Abel included, believes dominance now comes from companies with these massive, unshakable infrastructure moats. Alphabet is essentially a digital toll booth. They're buying scale.
Okay, so if we connect that purchase to the bigger picture, to what else they're doing, it actually highlights how cautious they still are overall.
It does.
Which brings us to the other side of this coin.
Yeah.
Apple.
Exactly. Even as they were buying Alphabet, they were selling something else. Harvesting gains. It's a strategic reallocation.
They're recycling that capital at the highest level.
Precisely.
I'm looking at the numbers here for my investors. BRK trimmed its huge Apple stake by another 15% in just the third quarter.
15%. And that's on top of previous sales.
Right. I mean, Apple is still their largest holding, worth over $60 billion. But
yeah.
This continuous selling is significant.
Very significant.
Think about it. They've now sold nearly 3/4 of the 905 million shares they once held. That's not just rebalancing. That's a massive strategic release of capital.
And it confirms a trend we've been seeing for a while. Berkshire has been a net seller of stocks for 12 straight quarters now.
12. His valuations just keep climbing.
It suggests a very disciplined approach to me. They see valuations getting stretched, and they are systematically taking profits.
And it wasn't only Apple. I also noted they reduced holdings in Bank of America.
By 6%, yeah.
And also trimmed VeriSign and DaVita. So it's not a full retreat, but it's a very measured reduction in a few core holdings. They're freeing up cash.
And this is where the timeline becomes so important for anyone watching DRK's future.
Right.
This surprise Alphabet buy is revealed just days after Buffett released his very last annual letter as CEO.
The timing frames everything. It makes this feel like one of the last big moves of his era.
An era that's officially ending. He's stepping down as CEO at the end of the year, handing the reins to Greg Abel after, almost 60 years?
It's more than a leadership change. It feels like a cultural shift for the entire company.
And a shift in communication, too, which I think is just as critical. The Oracle of Omaha wrote that he is, quote, going quiet.
No more annual letter. A tradition that started in 1965 is just over.
Over?
So he isn't vanishing, but he's changing how he communicates. He said he'll shift to an annual Thanksgiving message.
Right, and he'll ramp up his philanthropy, giving away that remaining $149 billion stake in the company.
So let's put it all together for the investor listening right now. What does this all mean?
My analysis is that you have to view these final moves, buying Alphabet's AI dominance, trimming Apple's massive gains, through the lens of succession.
It's all about the new leadership team.
I believe so. We're watching very closely to see if this is just a final taste of Buffett's influence or if it signals a permanent, more aggressive acceptance of this kind of high-scale growth tech under Abel, Combs, and Weschler.
The focus has definitely shifted. It's about owning companies that dominate through technology, even if they don't fit that classic value stock definition.
The definition of value might be changing for them.
Which brings up a fascinating risk. Are they moving billions from the stability of Apple's ecosystem into the relative volatility of Alphabet's ad market and this AI arms race? Is that confidence, or is it a fear of being left behind?
And that is the core question, isn't it? This reveal of the Alphabet stake, paired with the selling of Apple, it's one of the last major capital moves disclosed during Buffett's transition. It forces every investor to ask, is this the ultimate sign that even the world's most famous value investor now sees that long-term, unmissable dominance lies in internet and AI infrastructure? Thank you for listening. Subscribe to deepresearchglobal.com for more latest business news briefs, company analysis, and investment insights.